Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 16th of June, 2020. So here we are with the market that was pretty wild again today. A lot of events taking place. I'm not giving them in the order of importance. What happened? First report, the retail sales number up a whopping 17.7% for May. That's a record. However, you're coming from the depths of you-know-what. This market has crashed in retail sales, so it's a nice beginning of a sign of improvement, and I'd rather look at the glass half full than half empty, and that's what the markets basically did today. The next thing we had is the Fed is talking in front of Congress. Now, I'm not giving them in sequences. Got to pay attention to that. Do you honestly think the Fed chair is going to go in front of them and say things are terrible, blah, 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 or anything not to be supportive of the economy? Absolutely not. He will tell them in Fed terms they have to do what? We need more spending. You know the president with his $1 trillion infrastructure bill, it's a wish and a dream that is not going to happen in front of a presidential election. He's got nothing from the other side of the aisle, and he's not going to get a win like that going into the election. So let's forget that. It could come from states, it could come from other areas, but it's not coming from that. Then the other good piece of news was there has been discovered in the UK a treatment. Now the word is treatment, not a cure. A treatment for some people that are very ill with troubles breathing from COVID-19. Out of a test, 1/3 did well with it, helped them tremendously. The other 2/3 no. 1/3's better than zero. It's a first step. And the drug is not expensive. It's over the counter. It's a drug for arthritis. Yay. That's good news. All right. So you can see behind me a sea of red, but let's get into the markets. First off, we came back to this old high that we had made in XLK. That's very important. So the market is playing around here right now. Let's call that distribution. Do you get that? You know what that term is? You get up to a point, you fall down, you're looking for where the buyers come in, you come back in, where are the sellers appearing? They're appearing at that old high. That's the first thing. What is the trend? There isn't one. Why? If you follow my thinking, an uptrend can be defined in the most simplistic terms as a chart pattern of anything that has higher lows and higher highs. Higher lows, higher highs. When you break it, you have nothing. You have a lower low and a higher high. Nothing. That's where you're at right now. When I look at the market, I always look to see where the market's at in terms of moving averages. And the reason is because the crowd, in some manner, follows moving averages. Very important. You don't want to be away from the crowd. You want to be with that crowd because then you start understanding money movements. And what the market does is when it's way over it, one of the things I teach in my charting course, it is not uncommon. It is common for the market to pull back to the 18-day moving average to see what is on either side. That's what you've done. The market's looking for a new pattern to trade from, and it did it right at that number. Under the market's the 100, then the 200, and they're lined up bullish. Whenever you have the short-term average over the medium term and the medium term over the longer term, that's a bullish setup. You're in one. Where's the resistance? If you understand the theory of the algorithm Bollinger Bands, you'll understand that it adjusts to market action in such a way that 95% of the time the market will trade within the band. You don't want it to be 100% because then it's always in the band. Why even put it on the chart? It's never going to get outside of it. So the theory is work with the 95%. And if you go back and you look hard at this, you'll see that that works out. Can you get under the band? Of course. That's the theory. Are you staying under it? No. So important to understand. Does that mean the market's not in a downtrend? No, but maybe instead of selling here, if you're inclined to sell, maybe you can sell to the right hand of the band each time. If you're buying and you get up to it and you want to buy, maybe you can buy again to the right-hand side, which in theory is the same price or lower, but not over the band. Very important. Well, if the market continues its rally tomorrow, 103.93 is that resistance point. What am I looking for the pros if they're in that with any type of mathematical genius thing they have going, I'm still going to look for the resistance there. That won't change. What about momentum? You have divergence. Momentum has been pointing down, and finally, it's like a horse that's run away on you. And yes, I rode horses. You pull back on it. And as you pull back on it, by the way, I tried jumping. I was the worst person in the world for that. But as you look at it, you're not overbought. You came down sideways. Okay, so interesting what's going on there. The resistance, 103.93. The temporary support, the 18-day average, and not trending. SMH, the pattern on the swing line is bearish because you have lower highs, lower lows. It's fully countered because the bias in the market, the price relationship of the current price to the 18-day average determines, are you have bullish bias or bearish? If the price is under it on a close, it's bearish. If price is over it right now or on the close, it's bullish. On it, it's neutral. When the two fight each other, you have nothing, and that's what you have. The industrial sector, the XLI, just like the other markets, fell back into these key averages, sort of finding its footing, but you got a lower low, a higher high. I don't see anything right here. I see a market that gave a nice correction. If it continues up, resistance at first the 200-day, then the upper Bollinger Band, and support back at the 18 and the 100. A nothing chart again. In the energy sector, you negated the downtrend today. What do I mean? You had lower highs and a lower low, oversold as can be. You had a reading that was under 30, so you're oversold. If the market clears this 40-80 level, what happens? We break the pattern of lower highs, lower lows, and that's what you did today. So you're back to neutral, trading basically against that line in the sand, that 18-day average of closes. Now QQQ has remained bullish through all this. It has kept the higher lows and higher highs. And yes, this low did not take out that one. So we've got that. We had momentum turn down and lost an embedded reading right here. And instantly it went to that 18-day average. Often you get a chance, if you wanted to be a contra-trend trader, if that happens, to go short the market looking for it to get there. It offered none of that. It just went right down to it. And right now it's sitting and trying to figure out what to do. Who's in control? The bulls. Are we overbought? Unfortunately, yes. Even though it's 70.13, it's over 70. It's either overbought or it isn't. It isn't close to overbought. It's overbought or it isn't. So I don't know if that you're going to get a lot of follow through in the market. If you do, I look for the 246 level to be the resistance point because the Bollinger Band job is to stop a rally after you've gotten a good spring in it. In the emerging market ETF, 6201 is the key number here for the swing line. Today's high, 6202. And I didn't even see that as I did these. I should have this other arrow pointing up. You're out of your downtrend. You've now flattened the market and riding that 18-day average of closes. One tick does the job. In GLD, tell me what's going on. You've honed in on the 18-day average. You've been frustrating traders, I can tell you. Let's step back right here. Since March, the traders that have been saying $2,000 gold, they didn't get it. The traders that going, it's going to break, they didn't get it. You're stuck at this 18-day average, accept it and let it just do its thing. In GDX, the gold miners ETF, what do we have? Well, you keep falling to the lower Bollinger Band. What's that mean? That's the support number. It's where the market should run out of momentum to the downside, and it's exactly what it's done. Is there a trend here? There isn't. You have a higher high and lower low. The bias is down and momentum has flattened out. TLT, I see a bear trend here. Now, let's talk Turkey. The Fed is quietly saying, well, we've looked at yield controls and so on. We know this is the 20-plus year Treasuries. They don't want that back end of the curve yield to get too out of control. That's where they're looking at numbers. Could be the 10. I don't know what they're looking at. So to look for a monster move to the downside, I think you're fighting the wrong foe. And that does not mean you're bullish. This is a bear market right now. It hit its first target. If it drops further, and it easily could, as momentum is just starting to roll, you can get to this 155.95. But looking for that home run trade that you're going to get out of this, I wouldn't fight the Fed. It's that simple. In FXE, this is the euro currency. You lost the bullish embedded reading right through here. This is when the market saw the red line get under the 80 and stay there for 2 days. That's the game. So I think the pros are going short. Both futures and this. They don't want to see the highest high taken out. And I think all they're looking for is the 18-day average. We'll see if they get that in the next day or two. So you put it together, you try to come up with a game plan, and I think we got one for you. So what we did, and I've heard a lot of people ask, can you put together a combo package for your SPDR ETF, both as a trial, so I get to see both if I want to see them for a full month? And the answer is yes. So if you go to our website at www.iraepstein.com and under the word research, you're going to see that we've now put what we call together the combo. You can either click on futures, the morning futures, or you can click on the SPDR ETF. As you get to the pricing point, you'll see it. 30 days for both, $17. You get an awful lot. First of all, I'm up to 34 charts now on the SPDR ETF. I started with 27. I've added 7. I'm going to go to 40. And I listen to what you have. You know, if the pot stocks are in, I'll look at those. I want to do more. I've added an other ETF category because something like jets, they don't fit into that. That's all the airplanes. I think you want to be watching that. The terminals, the airplane services, the manufacturing. That's important. Energy, I've added UNG. I think natural gas is a big one to watch. I've added more in the metal markets of miners. So Canadian miners and so on that people wanted to see. We've got that. There's 6 more I'm going to get. And if you have a one that you want me to cover, just write me here on YouTube and say, Ira, let me do it. And I'll do my research to see if I think it's worth the coverage and if it's broad enough covered that people really want to see it. But as I said, you can go in now and on a combo offer, you can get both at a good reduced price, especially on the subscription. Should you decide to stay with it, you'll see that we're giving 10% off the price of the two together. I think that's a neat price because nothing I do is that expensive. I keep everything low priced, my friends. A lot of time and effort, and you get a lot for that. Let's see if we can move this, but can't, doesn't matter. It's www.iraepstein.com. You'll see the words, and like I said, here's this one for $8.95, the other $7.95. You'll see that we've got them priced at an attractive price for you as a package, especially as you go forward with the subscription, 10% off both prices combined. I'm Ira. You have a good day. I'll talk to you all tomorrow.